Good morning, everyone. Good afternoon if you're on the East Coast. Very nice, Wade. Hope everyone's doing good. We'll be getting started in just a minute. Did anyone get an email today? Thanks, Mark. Gary says yes. Awesome. Robert says yes. Email. Good. Good. I hope we're not in store for another watching paint dry session here, but starting to look like it. Yep. Morning, Doris. Sure has, Boyd. Hopefully it dries. Good morning. Michael, HG. Gap and nap.
Gap and nap. That's what I always say. Gap and nap. Is there another class on right now or something? What's going on here?
I think T Buzz has a flash meeting right now.
T-Bus has a flash meeting at 12? What is he
That's what
doing?
Mark said.
When did he start, Mark? Hey, gang. That frisky T-Buzz. One second. Let me just mute I got my little thing going on here. Matt Genevieve. Smelly Gitano. Okay. My, oh my. Please post for everybody. Share all these good pleasantries with everybody. Uh, Edward Bodine. Yeah, Bodine. Not much of a reversal there. Marlo, Nathan, Gus, Dennis. And you should call customer service. Tell them that, Dennis. Javad, hello, Javad. Jill, Mark. Why does T-Bus do these? Does he know that we have them at noon? I mean, he was just here yesterday. Oh, Matt, Peter. Hey, Peter. Probably has a golf game. Jesse, Richard, HG. I agree with you, HG. I agree with you. Catherine, David, Cheryl, Bodine, Rickster. Is it Shannon? Hey, Shannon. Hey, Richard, Harold, Carlos, Phil. Strange seeing you here, Richard. We were just chatting off email a minute ago. Hey, Steven. Hey, Chris. Hey, Bodine. He can steal all the thunder he wants, Bodine. Hey, Joe. Spend the morning with Cam. He explained the A-line scanner. Good. You call him to the teacher's office. There you go. Evev, John, Bill, Geothi, Brett, Louie, Catherine, Ivan, Robert. That's right, Robert. No respect. No respect. Right, Richard, of course. I'm surprised you don't wear a face mask all day with all those snotty kids. You should walk in, crash his meeting. I can't. He's not here. He comes here like once a week, twice a week. He doesn't come here very often. He usually broadcasts from his house. Michael says too many webcasts at 12. Everyone should schedule according. So I agree with you, Michael. Yeah, T-Buzz is a character. Bodine thought he is in the office next door, but he doesn't come in very often. His office is literally right across from mine, like right behind me. But he doesn't come in very often. He likes to play golf. What are you going to do? I just sit here and watch the market all day. I don't play golf. I'm the only guy that lives in my subdivision that doesn't play golf. Amazing. All right, let's see how many people we got. Almost 300 here. We got 36 here. We're doing pretty good. Let me share my screen. I'm going to be leaving today at about 3:15. I have a haircut appointment, a beauty appointment, and Jeffrey will be joining us in about half an hour talking about ETFs, leveraged ETFs. Now, anybody join? Anybody take the Johnson Johnson trade today in the pit? Let's see, Brett took it. Richard's still in it. Joe did. Coordinate schedule, set up calls. I hear you. I agree with you. You would think, Gitano, with 150 people in the company, you would think somebody would organize them, right? But they try. Still in Johnson Johnson, still in it, still holding, still in it. Good, good, good. Nathan, Smelly, Clay. Good, 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 good. Nothing. Michael got it confused and thought we were going long, but it's all good, Michael. Should take up golf. I tried, Michael. I can't. It's not for me. I like being outdoors, you know? Told you it was a temporary crown. They were going to give you a, yeah, they gave me a temporary crown, and I'm gonna go there next week for the permanent crown. That's exactly right. That's exactly right. Now, a few things I want to talk to you about. This will be very important for day traders, okay? So I want to show you guys something I've never talked about actually. Single candles or single big candles. I want you to watch out for these, okay? See, when you have a big parabolic candle in a choppy market, what usually happens? It reverses. Now, if you have several candles like this, it's not as bad. But if you have one big candle like this, one big candle, what it usually means is the algos are probing. They're probing price action and they want to see what's down here. And if they can't get through here, they'll start moving up here, okay, which is exactly what they're doing right now. And now they're going to probe this area and see if there's a move up here. Uh, volume is low, but Volt is making highs right now.
Hit a
Tick,
full high though. I mean,
say what?
it's basically flat.
Yeah, it's basically flat. It's not really doing much. VIX is kind of sitting there, not really doing much. We're at lunchtime right now. ADD looks like if ADD goes above negative 275, it can have a move. But I've never seen a collection of better gurus in my life. Thank you, Jason. Thank you for everything you teach us, and thank you so much for bringing Kane to the pub. You're welcome. Isn't he great, folks? I've never brought anybody to the pub before. Think about it. Think about it. How good he must be if I brought him here, because I've never brought anybody into the pub in 7 years. So he's got to be pretty good, right? Otherwise, I wouldn't bring him in. I don't need it. It wouldn't do me any good. So when you see single arrow, my point here is whenever you see single arrows, single parabolic arrows, I mean, excuse me, bars, not arrows. When you see arrows, bars, right? I'm talking about the same thing. When you see parabolic arrows like this move, be careful. Look for follow through or a reversal, because usually what algos are doing, they're doing these single arrows like this to see how much support, how much they can probe support, how much they can shake the market. Okay, and usually most of the time they find that there's a floor, they stop and they go the other way. So they're programmed to probe. They're programmed to probe. So keep your eye on single parabolic candles. Okay. 90% of the time, single parabolic candles get reversed. Capiche? Let me see who's on YouTube. Hey, Peter. Hey, Bill. Hey, Naples fan. Do you guys understand what I'm saying? Single candles are very different than multi-candles. Okay? That means it's just moving way too fast. That means it's either news-driven, or if there's no news, it's parabolic. It's usually algo-driven. And algos are probing. They're probing to see where the floor is. All right, Rickster. Bill, good. You guys got it? Very important. No, it works the same way to the upside, but you won't see them as often to the upside. But they work the same way, just single, isolated. They're called okay. If you want to get technical here, they're called solo candles. Solo. You know, like Han Solo, like solo single. They're called solo candles. And solo candles are very, you gotta, What is this? Hey, Ricky Funari. First of all, please post to everybody so people can see what I'm engaged with you with. Here's what he's saying. Ricky, I keep seeing your Telegram channel since I signed up and some automated crypto stuff. Now, let me ask you, Ricky, do you think that's my channel? Do you really think that's my channel? It's not me, man. It's not me. It's not my channel, Ricky. You're being scammed. I've mentioned several times before. I don't do cryptos. I'm not going to ask you for money. Those are cryptos. Crypto channels are not mine. I have three channels. I have the regular channel with 5,862 people. I have that's the free channel, Roger Scott channel. I have the Roger Scott Pitt channel, which has 1,455 people. And then I have the Trading Zone Live channel, which has 515 people. Those are the only. Those are the. It's not a crypto ad. It's a. It's there is a Roger Scott crypto channel with 45,000 people. All are fakes, and it's a fake channel, and I have nothing to do with it. And I don't ask you for money, or I don't do that. Yeah. Yep. Not me, Ricky. I don't play that game. Still give advertising for the pub, but looking for official close to open position, not distractions. Sean, please write a letter and post it to customer service. Do you think I send advertisements to you at 9:30? Don't you think I have better? Have you ever seen me send you an advertisement? Look, if they have a chance to promote something, they're going to promote it. All right. It's called advertising. Yeah, keep telling them. Please don't stop on my behalf. Okay, so we understand the solo candles to the upside, solo candles to the upside to the downside. Okay. All right. Wanted to explain that to you. The second thing I wanted to do was bring something to your attention. What's the single most important thing that I'm looking at in the market right now? This morning, I told you what the catalyst is. Now, right now, what's the single most important thing that I'm looking at in the market? Can anybody tell me? Let's see how good you guys are. Thank you, Boyd. No, but that's a good one, Michael. That's a good one. Volume's a good one. Fed speakers, not right now. I mean, like, well, I guess that's fair. Fed speakers, no, not Fed speakers. Internals, no, but very important. Let's see, direction. Somebody said it. Somebody actually said it. Look at this. Mr. Gerard Desano. The only problem you made is you decided not to post it so everybody could see it except me. Right there. Said it. Why am I looking at the bond market right now? Nope, the bond market. Why am I looking at the bond market right now? Well, that goes without saying. It's bigger than the stock market. But why? Why am I looking at the bond market right now? Is the stock market doing anything crazy? No. That's right, Glenn. Yay! Because it's in trouble. Folks, who said it's not doing anything? Cheryl, let me ask you a question, Cheryl. Cheryl, do you really believe what you're writing, or you're just like trolling or whatever it is? Do you really believe it's not doing anything? Do you really believe the bond market's not doing anything? It's on the low of the day. Hey, Vladimir, how are you? I like seeing you here, Vladimir. Yes, thank you, Richard. And technology, and increase your interest rates. Now, I'm going to tell you, you know how Trump is making all these executive orders? Boyd, I'm going to tell you one executive order that would make me really happy. I've been talking to Murray about this. Why can't he put a cap on how much credit card merchants charge us interest rates? Because I'm going to tell you the numbers I'm seeing, if that's not criminal, I don't know what is. There should be a cap, man. I mean, there should be a cap. I think we're getting hosed. And I think the government should put a cap to it. Don't you guys think so? Now, I don't have this problem. I pay off all my stuff. I don't have any debt. I pay off all my stuff instantly. But yes, usury, of course. Why can't he put an executive order? I protest. I protest. Yeah, I'm telling you, that blows my mind away. Right, Matt? Doesn't it blow your
It
mind away?
is pretty insane.
It's. I did not receive email. Ellen, call customer service. So, and folks, the bond market. So why is it important? Look where the bond market is right now, guys. This is a high volume candle. The bond market's near lows, and we haven't been to this price level since beginning of this year. This is really bad for the stock market. This is not good for the stock market right here. Right. And the reason I'm talking about it is because the 20-year bond is not controlled by the Fed. It's controlled by us, the market. And the 20-year, and when I say 20-year, folks, don't get caught up in that. Anything over 5 years, 5-year, 10-year, 15-year, 20-year, 30-year, their correlation is about 95%. So don't get caught up in, it's basically short-term bond, anything like 3 months or a year, or long-term bond. There's only two. Okay. I think it's crazy. I think it's crazy. I think that we're getting so screwed. I think people are just getting screwed. Okay. I think this is criminal. Okay. Like hardcore criminal. That's my opinion. Now, and so, but to go back to what we were saying, the bond market making lows like this without the stock market really getting up right now is a very bad sign. And it's also a sign, Boyd, you may want to close your ears, that the bond market doesn't have a lot of confidence in the global economy right now and this 90-day pushback. Okay. And I do want to remind you that the correlation between the long bond and the stock market, not minute by minute, but over a 3-month period. That's a good point, Cyrus. That's a very good point. So, and Matt, keep your eye for Jeffrey, okay?
Hmm.
And this is not good for the stock market. This is not good for chips. This is not good for small caps either, by the way. You know, this is not good. I'm going to tell you guys something very interesting right now, okay? Uh, it looks like Treasury's having trouble financing their debt. It is. It's not good. It's not good. He should keep his mouth shut during market hours. Who, Seth? Who are you talking about?
He's talking about the president.
I don't know. Seth, who are you talking about? If you're talking about Trump, it would be much nicer if he spoke, and he can speak all he wants, but either after or before the market. That would be really nice. But, you know, uh, well, Powell's going to do his thing. That's not going to change. But I don't know why he has to speak during market hours when he's talking about the economy. But again, that's not here nor there. What is here or there is the fact that the bond market is stalling out and it's causing some havoc. If you look at the Dow's not doing so great. So this is not very good. Yeah. Yeah. So I want to teach you guys something important. Seth says Trump. Yeah, it would be nice if he wouldn't speak during market hours, but it is what it is. So yeah, DJ, it's terrible, man. It's terrible. Terrible. Okay, so I want to teach you guys something important, okay? And I actually learned this from Steve Cohen. Do you guys know who Steve Cohen is? Do you guys know who Steve Cohen is? He owns a major baseball.
He owns the Mets.
Yes, yes, yes. Do you know how he bought the Mets?
Insider trading.
We don't talk about that. Matt's right, but generally speaking, his hedge fund. He's considered the greatest trader, the greatest stock trader of our time. Now, there was a point in time when he was an honest duck before he made a lot of money, when he was kind of like me kind of guy, before he decided to become this big billionaire hotshot. And he was interviewed by Schwager, Jack Schwager, in Market Wizards 3, which I really don't care for. I don't really like that book a lot, but he's in it, so I read it. And Schwager said something really important. And one of the qualities that I have, and I've always had this quality, is I can look at something and really see what's relevant in whatever I'm looking at really quickly. Like relevancy just pops out at me. Okay. It's a gift I got since I was born. So if I remember sitting at a law class, just daydreaming. And then as soon as the teacher would say something important, I know what's relevant and what's not. I have a really good nose for relevancy. Okay. I've always had that. So one of the most important things that's said in that book, in his article, is that he has a very special skill. And you could put 100 people looking at something, and he will know exactly what's moving it. He knows exactly what the catalyst is at any given time. Folks, if you don't know what the catalyst is, then you are not watching or gauging the market effectively intraday. Only one person here said, look, the bond market. You have to know what the red flag is. You have to be that guy or that gal. You got to be that person. If you can't tell that, then you are at a major disadvantage. Why do you think we start off with every morning now? Every morning, what are the major catalysts? What are the major catalysts? Markets haven't opened yet, so we can't really see what's the red flag in the market. A professional trader will be able to look at the market within 3 minutes and tell you what the red flag is. Okay? I want you guys to understand that. And we keep doing this and we keep practicing this. Yeah, Bodine, Market Wizards 3. I'm not a big fan of that book. I like the first two. How do you acquire this skill, John? By coming to my class every single day. Like Richard's acquiring it, like Matt's acquiring it, like other people are acquiring it. Because I teach it to you, you see? No one taught it me. It took a long time, but is that intuition or teaching? No, it has nothing to do with intuition. It has nothing to do with intuition. Typically, the things that will impact the market, first of all, it's very easy to see what's moving the market because it's got to be something big, like the bond market, maybe. You understand? So you always have to see. Sometimes it's Tesla, sometimes, and I usually, I'm usually giving it to you in the pit. I'm usually writing it out. And I don't expect you to guess it there. You're paying for it. But Javad says I'm new to trading, and the pre-market video is the best training I ever get. Well, thank you. If you keep coming, Javad, what will happen is it will start looking to you, and I'm not kidding about this. This is really what it is. Mexico credit card interest is 55 to 84%. I'm telling you guys, there's got to be some kind of like a this is very bad. Like this is if this is not usury, I don't know what usury is really. You know, I really don't know what it is. That's horrible. Thank you, Stu. So it's what will happen over time. It's like watching your favorite show. Okay? It's like watching your favorite show. So I don't want to say this I don't want to insult anybody, so I'm going to stay away from this topic. But anyway, you know how you watch a show? You ever watch a show and you're watching a show and you can almost predict what the character is going to do next and the reaction of this character because they're soft and the reaction of this character because they're the tough guy? You can almost tell, right? A lot of times when you're writing for a show, you have multiple writers. All they do is watch the show up till now, and then they can just follow along. That's how show writers write, especially for big shows like Friends or, long shows. Point is, you will develop that skill and that will become intuitive. And then when you're watching all these things, like you got to have the bond market on your chart. Richard, do you have the bond market on your market internals chart? I know he does because I seen him send it to me. Hell yes, he just wrote. It's just a time thing. But here's the beautiful part of it. Here's the beautiful part of it all. What we're doing is very limited. It's not like we're learning a new programming language every week. We're watching the same damn show. It's got little turns, it's got little moves, but it's the same damn show. We're watching the same show. So after a while, you get used to the music, you get used to the intro, you start seeing things. There's a limited number of rules. There's a limited number of things. There's a limited number of players involved. So what happens is you become used to it, you become accustomed to it, and it becomes easier and easier and easier and easier, and then it becomes second nature. Like for me, looking at a chart is second nature. I don't have to sit there and ask myself, just like driving a car is for you. You don't sit there and go, okay, now I'm going to put the keys in. Now I'm going to move my left leg and I'm going to slowly lower myself to get in. Then I'm going to close the door and make sure everything is. You don't do that, right? I mean, most of us don't do that. I'm making an educated assumption here. So the point is, the point is that you will develop these skills because they're repetitive, because you're getting into the same car every day. Now, what happens one day when you have a flat tire and you have to get into a new car? Well, it's not like you're starting all over from when you were 16 years old and got your driver's license, right? You're kind of like, okay, this is the oh, okay, this it's here, it's here. Oh, okay, good. I got it. Same thing. That's why I keep telling you it becomes very routine. It becomes very routine. It becomes a systematic. And I try to teach you all of the players in the morning show, and I even try to do it in order. I do it that way for both of us so that I can see everything in how it's supposed to be. And then if I see something else not there, like this morning, Indian metals, I threw that out there. But otherwise, it's the same story. It's the same story. It's the same. You're going to the same school. You may be going to slightly different classes, but you got the same teachers that you see walking down the class every day, and you're seeing the same lockers, and the smell is the same, and the look is the same. And if you can do that, you're going to start understanding relationships, and you're going to start understanding shapes, and you're going to start understanding patterns, and you're going to see when you see something smelly, you'll know right away. So let me show you guys something. Last lesson before I get into the stocks, okay? I want to show you this. Yeah, you get better with time. And you do get better with time. It's no joke. You get better with time. Volt is starting to come off, Matt.
Yep.
Are you still short?
Mm-hmm.
Okay. All right. Okay. So, uh, Bullet speaking news going to sell number of shares to generate cash to cover corporate debt. Breaking news going to sell number of shares. They're yeah.
New offering.
All I'm going to tell you is this. This is a high volume bar, and I'm seeing price coming down all the way here to the 5, to right here, this area right here. See this? I think price is going to come right back here, right back to this area. We're going to huff, we're going to puff, and then we're going to come right back down here. I don't know if it's going to be right here or right here, but basically to this area right here, below 5 or below, 5 below. How about that? Like that name, 5 below. Well, Boyd. That was the whole plan, Boyd. Okay. So let me explain to you guys. Who don't understand this trade. This is a fundamental trade that is also now looking like a technical trade. But a very big hedge fund decided to load up on Hertz because they thought, because of Trump's car regulatory stuff, that used cars are going to become really, really valuable. And he loaded up on Hertz and drove the price from here. Bill Ackman, you guys know who he is. He drove the price from here to here. And then Trump came out and said, oh, I'm going to do an exemption on the autos, which obviously nobody could have predicted, right? And then price started going down. And I told you guys to sell it right here, somewhere right here, right around $7. And now it's below $6. And I'm not seeing anything different. This was, Sean, this was a fundamental trade. This trade was not based on, okay, all the rules and all that stuff I tell you, it's all based on the technical stuff we do. This trade was based on a fundamental bet. This is a fundamental trade. This is not based on technical price action. This is based on, I explained to you exactly what it's based on. Sean, when I give you a stock that's based on fundamentals, earnings, schmermings, this is like a Warren Buffett kind of play. I'm not telling you how long it'll take. This could be another 4 months. It could be sitting right here and then coming back down. All I'm saying was that I told you right here that the stock, that old Bill, is not going to be holding this stock because the reason he bought it is no longer there. Okay? Thank you. All right. So it's a fundamental. It's more of like an investment kind of a play. Like my trade with Walmart right now. I don't know if I'm going to hold it through earnings tonight or not. I'm thinking about it, but I don't really care. It's long term. Okay? It got in and out twice, 15%, acknowledge, appreciate, extended confirmation. There you go. Good. I mean, the market's not reacting on it right now. So let me go to the second lesson that I wanted to teach you, okay? So look, I was trying to teach you this. So you see how we deviate from the 8-day EMA, Palantir. I mentioned this today. I said that some stocks are starting to deviate from the 8-day EMA, okay? And you see how it deviated? It doesn't have a floor here. See how right here it has a check. It has a bid check. It has a bid check, a bid check, a bid check. It's got nothing here. It's got a gap here. Okay? Now, look at a stock like CCK. Do you see the difference between this type of move? Hey, Jeffrey, how are you?
Hey, doing pretty good.
Good to have you here.
Yeah.
How's life treating you?
I mean, another day in paradise, right?
Exactly. That's exactly what I always say. So I'm just showing them what a high probability move is versus a lower probability move. So I'm going to show you guys, okay? Let me see if I could find. Now that still looks good. See, I picked a bunch of stocks that are not overextended. Give me a good overextended. What's a good overextended stock? I guess Palantir is okay. So you see how it just jumped up, and now it doesn't have anything. But if it opened here, the odds are it would just stay within here. Now look at CCK. That right there, that's an A+ breakout right there. Because this right here is a compression. And the stock is barely coming out of compression. It's not deviated from the 8-day EMA at all. Okay? You guys see that? So if you're looking at stocks, try to find stocks that are moving like this instead of stocks that are moving more, with a big gap away from the 8-day EMA. Now, I'm going to give you my list of shorts, and then I'll give you my list of longs, and then we'll move on to Jeffrey, okay? Because I want to hear what he's got to say. He's got some good ideas going on here. He's launching. When are you launching this new strategy?
Roger, you're going to help me launch it next Tuesday, I think it is.
That's exactly right. Now, before I give over the screen to you. Oh, HIMS, yeah, let me look at HIMS. Maybe that's over. Yes. Thank you. Who was that? Klaus.
Hey.
Thank you, Klaus. That's it. Yeah. See, now look, you see, look at this. A lot of you guys ask me about stocks like this versus stocks like this. Look at how it's moving up. It's moving up, but look, it gapped, it consolidated, and now it looks like it wants to come up again. It's not too deviated from the 8-day EMA, and it's above the A line. Whereas HIMS, look how far away it is from the 8-day EMA. So one of the reasons why this morning, for example, one of the biggest reasons why I was so iffy about going longs is because most of the longs on my watch list looked like this instead of looking like this, okay? Please remember what I'm showing you right now. A lot of you get mixed up, and a lot of you think stocks like this look good, and they do, but that's a little overextended. You may want to wait for a pullback versus a stock like this that looks like it's primed to go higher. And also, if you were to use a mental stop loss at the 15, you're much closer to your stop loss. Now, let me give you guys my stocks to the short side and the long side, and then we'll move on to Jeffrey. So we got short side first. Doc, folks, just look to the left side. Look to the left side. This one's a little overextended, just a hair overextended. Maybe just a hair, maybe. APLS, I called out this one this morning. Should have taken it, but I didn't in the pit. Nice A line to the downside too. Johnson Johnson, which we took a profit on. I'm still bearish the stock. I think I'm going to be bearish on this stock till about 145.16, but I know a lot of you already made money on it this morning. Thank you, Mr. Roger Scott, for giving it to us. I still like Merck, and I still like VRTX. Now, why am I going so quickly with J&J, Merck, and VRTX? Because it's the same stock, right? It's the same stock. Their correlation is about 95%. One to a customer. One to a customer. But I wanted you to see that it's not just that one stock. LMT, wait for it to break down a little more. It's a little too strong for me right now, but I did like how it was looking this morning. And it's also very choppy. So let's just forget about this one for now. And then we got KHC. A little this morning Jeffrey, we had Pepsi, we had Kentucky, we had what do we have? We had like I said we have a meal. We had General Mills, Campbell's soup. I'm telling you, no, not General Motors. We had supper, right? We had Conagra brands. I mean, look at this, guys. Let me show you. Let me show you all of them. KHC, right? Look at CPB. Look at PEP, GIS, and CAG. One to a customer. One to a customer, okay? Now, same thing with healthcare, UNH, J&J, and Humana. Although I'm not really that big of a fan of Humana, but it made a high-volume bar yesterday, so I'll just keep it on my list for now. But I preferred the other two. And last short is AXGN. I like this stock to the downside, although I don't really see any advantage with these compared to the other ones, especially with stocks like Merck and Johnson & Johnson. You already have that. And then to the upside, let me give you the upside. Now, some of these are overextended. That's why I'm giving you a watch list, okay? What you should be aiming at, what you really should be aiming at is a stock that looks like this before you buy, like something like this, consolidation, very quick breakout. Now, let me give you some others. NVIDIA, I like NVIDIA, but again, we're running away. Look how deviated it is from the 8-day. I would definitely need at least a pullback to the VWAP, and I'm being nice, probably to the 200. Too much too fast. Chewy, I like Chewy. Again, it's very chewy. This stock will chew you up, okay? But it is breaking out, and I would just like a little more of a closer to the 8-day. I'm being maybe a little over panicky here, but the stock itself is not a day trading stock. It'll chew you up. CELH, I like this pattern. I like this pattern a lot. This is a nice pattern, and I like how it's above the American flag. It's got a nice breakout here. I like CELH. Here's one that's probably under your radar, Stone. It's a nice A line to the upside. Look at this one, Matt. Nice STNE, although it's less than $20, so we got to be very, very careful. Matt, I would get out of the VWAP on this one. TD, very interesting stock. By the way, Toronto. This reminds me very much of CCK, guys. See, up, consolidation, breakout. Low risk. This is beautiful. This is a beauty right here. Look at CCK. That is a beauty right there. This is what I want your your entries to look like, okay? Assuming everything else is kosher. There's ECH. Again, this stock would have been perfect right here. See that? Right here on this bar. Right here on this bar. But again, this is watch list stocks. Zscaler, a little too much too fast. Right here would have been good. Right here. HWM, which actually looks very similar. It actually hasn't broken out yet. But I'm going to put a little alert right here. Yep, 160, 180, breakout. And I'll put it for a week. I like this. This is on my watch list now. I would just want a little more upside, just a hair more, and I would be ready for this stock. But I do like it a lot. And I already gave you the last one. Oh, VRT. I like VRT. That is my watch list, folks. Those are the stocks that I'm looking at currently. Okay. Jeffrey, any comments about any of these stocks? Any comments at all? If not, that's fine too. Just thought since
I mean, I really like Celsius. I've been trading the crap out of that one since November.
you like this one, huh?
Yeah, I'm a Monster Energy drinker, and that's a big competitor, and their stock took a little beating, and now it looks like it's about to play catch up again.
Yeah, I agree with you. I agree with you. And I like how it had a bid test right here, a bid check on a high volume bar right at the 50-day. I like how it's respecting the 8 and the 15, and I like how it's not overextended, but above this level.
And
There's
he's got
not
good put premium. I've been selling the crap out of puts on those.
that may be a good thing too. That may be a good. I didn't think about that here, but that may be good here too. That may be good here too. So let me look at the spreads. Mat is really tight. My mat will not let me do anything if the spreads are remotely high. No, this is beautiful. This is very nice. Yeah, yeah. This is very nice. I like this. I like this. I like this. I like it a lot, actually. Well, if I didn't like it, it wouldn't be on my watch list. I like the double bottom here. I like how we went low and it respected this on a high volume. I like how volume intraday is picking up. I like this. I like it. There's nothing bad about it. All right, Jeffrey. I'm going to unshare my screen, and
Yeah.
Matt. Did you get out of the SPY here, Matt?
Yep.
All right. You take profit.
Mm-hmm.
All right. Did you guys make out like bandits on the SPY trade? Sorry, Jeffrey. We're day trading the
Hey.
SPY here.
Yeah, there's no reason to quit sharing your screen. We can just chit chat here a minute.
Okay, sounds
and
good.
You can pull up some charts if you want to. You know,
Perfect.
like
Let's do it.
Like hymns you were just talking about there a minute ago. If you want to pull that one back up.
Yes.
If you were going to trade options on something like this, what are all the things that you have to worry about?
Where do you want to start?
Yeah, that's the point. I mean, let us know in the chat what are all the things you have to worry about? You got to be right on what? Number one, direction. You got to pick a direction, right?
Yeah, that's
And then
a good start. Yeah.
now, where's the target? You got to be right on a target. You got to figure out somewhere between where we are and where we're going, we need to figure out a strike price, right? Everyone with me?
So far, so good.
We got to figure out a duration, like how far out are we going to buy in time? Like how fast do we expect this move to take place? This is getting to be a lot of stuff we got to get right? I mean,
a lot of stuff we got to get right. Tons. And well, why don't you continue? I don't want to cut you off. You're moving it. You're naming all the good stuff. I don't want to cut you off.
Yeah, this is lots of stuff we got to be absolutely right on.
How about implied volatility?
Yeah. So we get that, and then you could be right on virtually all of these and still lose money.
As Richard just said, only one has to go wrong. Remember, chain is as strong as its weakest link. All that, the whole, yeah.
So how many of us have done a trade like this, picked all those things, got it all right, and still lost money? So I picked up a trade on HIMZ this week, or I guess it was last week, which is a 2x leverage on this, and all I did was buy shares. All I did was buy shares 7 days ago. Today,
Okay.
I booked my profit on that weak candle.
Yep.
I didn't like the failed breakout of the prior high.
Yep.
And I closed it today. That was a 45% gain in the last week. And I didn't have to worry about strike price. I didn't have to worry about duration. I didn't have to worry about implied volatility. All I worried about was direction. And that was it.
That's what I love to do. Trade shares. It's my favorite thing to do.
And I got option like gains. I booked 45% in that 7-day period.
That's a pretty leveraged. Just the look of it, I've never really took too much of a look at this, but this thing is a firepower, man. I mean, like this thing is a mover.
Yeah. I mean, sure, you could have played some options, but the risk is very high. And with that implied volatility, I mean, you could have still lost money or, maybe not even done 45%. So
Agreed. Can we take a look at some others?
Yeah. I did gold.
What ticker symbol did you use? Because there's 50 for gold.
The one I traded was GLL, which is short gold.
Yeah. Ultra short gold.
Ultra short gold is 2x leverage short gold. I just made money on this because gold is doing what? Pulling
It,
back off the 3,500.
exactly. So basically, you're taking advantage and just trading shares on very, very high leveraged ETFs.
Yeah.
If I'm not
They don't
mistaken.
have to be high leveraged. The more conviction I have, the higher the leverage I go for. But some of these are just, like this is an inverse and it's a leveraged inverse. We
And there's
have
lots of them too.
There are lots, and there's more almost every week. There's
Yeah,
something new coming
there's
out.
this is very folks. This is this is a very popular trend. It's very popular right now. Jim, there's no options, Glenn, on D's. That's the whole point.
Yeah, we,
Uh,
we don't care about options. We're not focused on options. We don't, we're keeping it stupidly simple by just getting direction right. We don't have to go for time or anything like that.
let me answer a very good question, Richard. They are so some are very liquid, some are less liquid, but 99.9% of them will be liquid than 99% of the options. If that makes sense. Does that make sense?
Another
So
advantage, you can get out after hours with
yeah,
shares.
yeah. And remember something, guys. Remember something else about liquidity here. And I taught you this a long time ago. These are all synthetic assets. Okay. There's no such thing as a stock that's a double leverage bull triple X Tesla, right? It's a proxy. It's a proxy
Yeah,
for Tesla. There's a computer
100%.
pro. Yeah, basically somebody created this as an LLC, opened up a bank account, created a program that just moves Tesla and then allows you to piggyback it. But here's where I'm going with this. Price can't get too far away here from the actual asset. Otherwise, you can arbitrage it like this. And trust me, there's algos that are so advanced that they'll find a 1 penny arbitrage and they'll
Yeah,
arbitrage it. So, so you don't really have to worry about liquidity here because it's a synthetic asset. So it can't really get too far away from the actual asset. People don't think that way. And when I explain it to them, they're like, "Yeah, you're right. I never thought of that." There is no such thing as there's no stock. This like what we're looking at right here. This is this is just basically trading off of Tesla, right? This is not an asset that you can do much with. I mean, I can go right now and buy 100 million shares of this, but
yeah,
the price can't get away from Tesla because it's arbitrage. Somebody would arbitrage it. So it's just a proxy.
yeah.
So,
When you went and bought 100 million shares of TSLL, they have a basket, what they call a basket creation, where they're going to create those shares by doing all the things they do to get the 3x leverage, um, or 2x leverage in this case. It's, there's a process and it's outlined in the prospectus of every one of these leveraged ETFs. There's no universal anything when it comes to these leverage ETFs. There's
right,
no two of them may do the similar thing, but they all do something different. Some of them hold treasuries, some of them hold,
right.
futures on this or that or the other. We play call options on Tesla 1 month out, and other ones may sell puts on Tesla 1 month out. I mean, you never know. It all depends on the underlying, how it moves, what instruments are available to play. But the thing is, these ETFs cover every sector. They go
And
long,
and,
they go short.
and then some. I mean, orange juice, gold, copper, and believe it or not, I have some of these ETFs in my data miner for my scanners. So we put like 50 of them in there. So currencies, commodities, cocoa, coffee, whatever you guys could think of, it's there. And remember, the liquidity may not be like Microsoft, but you don't have to buy the option. You're just buying the underlying, and the underlying will always have a spread better than an option. So you don't have to worry about that at all.
Yeah, I mean, it solves a lot of problems for a lot of people. It's just, I've had clients that just are frustrated with the options, especially you get it right and you still lose money. I've seen that a lot lately in this volatile environment, as we had volatility increasing. And I've been able to nail several of these back to back, long and short, up and down, all through the market. What I got into just yesterday was FAZ because I'm expecting financials to take a little pullback. JP Morgan looks a little hot. Goldman Sachs looks a little hot. They've had a heck of a run off the lows that we had just a few weeks ago. And I'm expecting, Goldman Sachs and JP Morgan and maybe a few other banks to take a little pullback. So I traded FAZ, which is short financials.
Folks, I just posted a link and I'm going to post it in YouTube as well. I don't really know who, I'm not trying to sell you anything. I'm literally just looking at this website. I use it a lot to find ETFs. This is a very nice directory. Jeffrey, I don't know if you used it, but I posted the link in the chat, ETFDB / ETFs.
I actually use a scanner on TradingView that you can just click the leveraged button and it filters just the leveraged ones. You can click the inverse button, it filters just the inverse ones. And I mean, these are all super nice resources though.
Check this out, folks. I just wanted them to see all the different ones. I guess
if you scroll down past the sponsored links, you'll probably get some that are more widespread than just the name brands. Yeah, Direxon is a brand.
Yeah, the website is not. Oh, yeah, here it is. Yeah, but you could see here Palantir, Nvidia, Micron. Here's all the ETFs. You could see it right here. So look at
Apple and Amazon and AMD.
And a lot of these are cheaper. Nvidia. A lot of these are cheaper than the actual stock. Like Nvidia. Remember when Nvidia was $1,000? We were doing these for like 58. So here, I'll post this for you guys. By the way, Jeffrey and I are not affiliated with this in any way. We're just giving you guys some useful info that we sometimes look up online. That's all this is.
Yeah. I go to anywhere I can get data.
yeah. Meta, Microsoft. Sometimes, like, remember, guys, we were talking about Netflix, and I told you there's NF, and we were able to do it for much cheaper. So Palantir, here's bear ETFs, here's bull ETFs. And this is just one company, Direxion. There's several others.
There's tons. There's T-Rex and there's iShares, which is BlackRock. There's it goes on and on.
Yeah, there's a lot, folks. Basically, the point is, here's a list of. This is the website. I really like this website. I've used this for years, but you could see here the most liquid one in any group. You could see TMF. We use this. We used to use this in one of our programs. Technology bulls, chips, Dow, negative Dow if you want it. But I mean, whatever you want. There's just so many of them here.
Hey, Roger.
Yes,
Roger. Sometimes the more liquid ones don't perform as well as some of the less liquid ones. They don't necessarily get their leverage. The thing about the leverage is usually when you read the prospectus, it says we're trying to get 1 day performance 2 times Tesla, or 1 day performance 2 times HIMS. That means when you buy for a month, if you expect this move to last a month, you might actually underperform the 2x or 3x benchmark, especially on a higher liquidity one that's got more people arbitraging it. It may put some downward pressure on it, and they might not meet that goal over that longer period of time.
Good to know.
So that's a good example is MSTX, MSTR, MSTX. MSTR is the underlying MSTX. This one got particularly hammered on this pullback. And if you look at the expected move that we could possibly get, maybe a 50% upside on MSTR underlying, a 50% move on this one is not going to put it to a higher high.
So let me just answer some questions. So Beverly, you didn't post for everybody, but I just want everybody to see. She's asking me, do they decay like options do? They don't decay. There's no decay here. It's like buying a stock. And Jeremy's asking, is there a silver ETF? Jeremy, there's like 50 silver ETFs. I'm not kidding.
There's a lot.
There's a double. There's a triple. But there's probably, if I had to guess, there's probably 30 of them. I'm not exaggerating. I'm not exaggerating.
AGQ is a leveraged upside.
Yeah, there's AJQ. Sorry.
AG Golf
G.
Alpha Golf Q Quebec.
Q. Oh, got it. AGQ. Let me AGQ. There it is. There's just too many of them. Really, I'm not kidding. There's too many.
And there's more almost every day.
Yeah. And people love them. They don't have decay and they give you leverage. And a lot of times they're cheaper than the stock. So you get a lot for your money. And also, just to add, a lot of you don't like to go short, or a lot of you are not comfortable going short. So you could pick, can you give me an example of a short one so I could show them how they can go short without going short?
Well, GLL is the one I just booked on gold.
GLL,
which is
there you go, guys.
gold.
So Jeffrey wanted to short gold. Look, gold is coming down, right? Look at GLL. It does the opposite. So he can go short without going short. So instead of going short, he's going long.
Right.
So if
It's
you have
easy
some
to
kind of a
trade. It's
yeah,
super easy to do.
so if you have some kind of a restriction, if you have some kind of restriction in your IRA or whatnot, or you don't feel comfortable going short, just you can buy a ultra short or a short ETF, and then you're just buying. You're not selling. Now I know it sounds silly to me and Jeffrey because for us going short is going long. There's absolutely no difference, but for some of you it may. So and there's a lot of these, and he's right. They're popping up every day. Matter of fact, Jeffrey, about 17 months ago, 18 months ago, when we started the pit, I wanted to find some before the stock splits, like Amazon and all those things that split recently. And there was probably a, thir- a third less than there are now with all of them now. There's just so many more popping up that I'm not even aware of. I think one
Yep.
day, guys, I think I'm going to make a list and post it in the pit members area to really help us out. I think that would be maybe I'll ask Jeffrey to do me a favor and give me his list. Jeffrey, can you give us a few of your favorites? A few asked for what are some of the ones you like to look at?
Some of the ones I frequently fly. I like SPXL and
Yeah,
SPXS. That's short and long
yeah,
SPX.
yeah. That is a very popular one, right?
FAS is long financials. FAZ is short financials. Yeah, I'm giving you kind of pairs.
Yeah.
UCO is ultra long oil, and SCO is short leveraged oil.
USC.
That's
Oh,
UCO and SCO.
SCO. SCO. Got it. Got it. Got it. Got it. Got it. Got it. UCO. There it is. It's completely inverse, guys. See that? That's beautiful. So let's say you think oil's going down, but you don't want to short it. There you go. Very, very simple. So again, very, 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 very straightforward. I love this. I love this. This is fantastic. So Jeffrey, do we have any links for anything to share just yet, or we don't have
Um,
anything yet?
I think we're gonna start hyping that up tomorrow. Is what I have. They just wanted me to come on and talk to your group since we're gonna do this together next week. Yeah,
Looking forward to it.
I'm kind of inviting you to help me launch it next week, right now. So
I'll be there. I'll be there. You know how much I like your stuff. I'll be there, and it'll be my pleasure. It'll be my pleasure, folks. Please say thank you for Jeffrey for taking the time and spending this time with us. I really appreciate you guys. Please don't go anywhere. We're going to have a stream. They're going to stream a webinar, one of my webinars, here in a few minutes. So please don't go anywhere. Hang out with us. And Jeffrey, thank you again for being here. I'm not going to unshare my screen.
yeah, everybody should
And
tune in next week and see what we've got in store.
it's Tuesday at 1 o'clock. Yes.
I believe that's correct, and I
Let
want to
me
invite
double
everybody that's here.
let me double
Um,
check. I wish we had an official link so that I could actually give them something. But you know what I'll do, Jeffrey? What I will do. Here's what I'm going to do. Next Monday and Tuesday in my morning show, and here what I will do. I'm just confirming the dates. What I will do is yeah, it's at 1 o'clock Tuesday the 20th, folks. So
I have a
put it.
link.
You have a link
Yeah.
to Jeffrey's thing.
oh,
Yeah.
I don't even have a link.
See this?
Supercharged Ticker Summit.
Yep, that's
Maybe
that's
20?
it.
Yeah, that's the one.
That's
Oh,
the link right
well,
there.
there you go, folks. Let me just click that link, make sure it's
Yeah,
kosher.
we're gonna call them
Yeah,
supercharged tickers, and
yeah, that's the link. Can you post it in YouTube, Matt?
Yep.
Thank you, sir. Thank you, sir. All right, guys, we appreciate it, and we want to thank you for being here. Please don't go anywhere. Matt and I and Jeffrey's going to go. We're going to be in the background, Matt and I, answering any questions you may have. Please don't go anywhere. I want you to watch this class, okay? It's a very
thanks,
important
guys.
swing trading class. Jeffrey, thank you for being here, and I'll talk to you later, and I'll make sure to promote your link on Monday and Tuesday morning. Bye, guys. Thank you so much. Don't go anywhere. Hang out and listen to this. One second, guys. We're going to get sound. Hold on. There's no sound. Hey, Deanna, are you there? Somebody there? 1 second. Let me tell her that there's no.
Yep, I'm on it right now. Looks
Okay.
like I just found the issue. Yep.
Okay, cool. Just wanted to let you know that there's no sound.
Let me see. Should be good now.
We've shown you is actually from
Yep.
225.
Thank you, guys. You got sound.
Actually, let me explain this because this won't make much sense. So, as I said, I launched this program in July. Launched the program in July. We've had 24 trades. They've all been winners. However, thank you, Bob. I appreciate that. However, unofficially, we've been giving these trades. We've been sprinkling these trades throughout all of the various programs. So basically, let's say that Pattern Trader didn't have a trade. I didn't have a trade to give you. I would give you one of these as a bonus trades. So I've actually been putting these trades on since February of 2020. But because the performance was so good, we decided to make it into its own program. And that started in around the summer. So just to explain to you the difference. But the bottom line is this, and this is something you should really pay attention to. And again, most folks not showing the screen you want. Yeah, it is. Yeah. Okay, good. We're all on the same page. So from the time we started back in 2020, now 5 years is a long time, our win rate has been 77%. Since we launched the program, our win rate has been 100%. So I just want you guys to understand the difference because people will be like, wait a minute, I thought you just launched it. Now this says 2020. So I want you to understand the reason we launched the program is because I used this strategy as a backup. And, it's kind of like this. It's kind of like when you have it's actually a real story. There's a lot of bands out there. I know several bands, including ZZ Top. Somebody from the band dies and they replace them with the backup guy. And it happens all the time and you don't even notice the difference. And so this program was my backup program that I would use when I would need trades in a pinch, but the setups my primary setups couldn't find any. So I would use it. And after a while, we went through them. We were like, wow, the results were really good. Why don't we launch this thing? I mean, you have a track record for 5 years or 4.5 years at the point, and that's what we did. So this came from 5 years of information. Now, my name is Roger Scott, and today, I'm going to give you my number one pattern to trade in today's market. And I'll also give you 2 stocks that I really like right now to the short side. That wasn't even part of this. It's an indicator based on a pattern that's allowed us to accomplish 2 incredible feats. Grow our model portfolio by an average of 85% a year since 2020, achieve a 77% accuracy on over 140 live published trades. And that's going back to 2000. So 2020, not 2000, 2020. Wouldn't be a lot of trades if it went back to 2000. So it's really good. I mean, this is really, really good. Okay, really, really good. But get this. On July 15th, I shared this pattern for the first time. That's when it was, July 15th. Since then, we've had 2 pullbacks, real nice, juicy pullbacks. And our pattern has remained undefeated. So far, we've had a 100% win rate. Now, I do believe we're going to take our first loser tomorrow, AT&T. But we haven't taken it yet. And once we take it, we'll actually be able to calculate a profit factor. We haven't been able to calculate a profit factor because we haven't had any losing trades. In fact, it's posted 24 straight winners in a row. Right there, 82%, 26%, 43%, 77%, and 20 other needle-moving winners. And that's why I invited you to today's session. As of this moment, our pattern is taking shape once again. If things play out, we'll be targeting our 25th win next. And I'd love for you to be a part of it. Now, I'll share all the details in just a moment, but first, I'll let you know how it works. It all starts with this pink indicator that you see on the chart. It's called the A line. Despite its simplicity, it plays a key role in identifying our pattern. Now, the way it works is really straightforward. All we've got to do is wait for the daily candle to close below the indicator, open the trade the very next morning, and close out anytime the stock crosses back above it. For example, let's look at the historic market data from March 26th. If you don't remember, the S&P had just closed lower for its fourth consecutive day. The market internals were no good. Hey, Matt, look, the Volt is here. I tell you guys about the Volt all the time, by the way. And most folks assumed another down day was just around the corner. However, that's also the day 3M closed below the A line. Now, you could see what I mean right there. Despite the chaos in the broader market, it was a clear sign that 3M was primed to snap higher. Anyone who opened the basic trade the next morning would have seen a 77% return just 2 trading days later. That's no different than watching $1,000 turn into $1,770 in just 48 hours. To your typical trader, that might seem far-fetched, maybe even too simplistic to actually work. But when you understand what's really driving this pattern, it's not uncommon at all. As you'll see, there's something special about this one particular pattern. When it appears, we know that with 100% confidence, a bullish move is more likely than a bearish move. For instance, look at one of the top examples my team found in stock ticker PGR. Back in February, the stock had closed lower for the 4th day in a row. To the average Joe, that's usually a bearish signal. But when you're trading my number one pattern, it's part of the plan. All right. And in case you can see now, Progressive closed below the indicator. Once again, it was a clear signal. A bullish move was just over the horizon. Anyone who opened the trade the next morning would have seen a 93% return in just 2 days. Just $1,000 would have turned into $1,930. And if you let it run a few days longer, it would have turned into over $4,000. And with opportunities like that, you don't need to do much else. You don't need to bet on earnings reports. You don't need to chase headlines. You don't need random tips from Mad Money. You just wait for the daily candle to close below the A line. You open the trade the very next morning and close out anytime the stock crosses back above it. Okay? Now, let me be clear. This is not your typical stock market pattern. It's not based on price action or any other commonly used candlestick pattern. It's tied to a market anomaly at the center of hundreds of academic papers, an anomaly that accounts for 80% of the move in the stock market. And by leveraging it the right way, we've been able to find dozens of meaningful wins in both good times and bad. For example, let's step back to the pandemic. Simply following our pattern, I was able to produce several high-profile wins, including a 50% winner on VRTX overnight, 72 on PayPal in 5 days, 108% on Freeport McMoran in just a week. And keep in mind, these were real published alerts in time where uncertainty ruled the markets. Now, fast forward to the bear market of 2022, and it was a very similar story. Between January and July, this pattern won 18 out of 20 times. That's why I consider it to be the world's most predictable pattern. And I'm not just saying that. I have the evidence to data to back it up. When it appears, we know with 100% confidence, a bullish move is likely to be on the horizon. It's the one pattern that seems to shine during inflationary markets, deflationary markets, bull markets, bear markets, recessions. It's how we've grown our average portfolio by 85% per year since 2020. Oh yeah, it does options, very, very liquid options, and we give you the options too. Now, in the last 3 decades, I've traded countless setups. I've grown 2 multi-million-dollar hedge funds, and I've managed money for the Bronfman family, the richest family in Canada. At least they were 10 years ago. I got to look it up. I got to see if they're still up there. But this one predictable pattern takes the cake. Now, of course, I'm not guaranteeing a winning outcome every single time. Despite the performance, we both know there's no guarantees in trading. Things happen, markets turn, and people lose money. But we've quietly targeted this pattern 140 times in the last 4 years. It's managed to win more than 7 out of 10 times on average. And that's why I prefer to teach this pattern to our employees. No joke. It doesn't require them to be glued to the market all day. They obviously don't have time for that, right? They clearly don't have time for that. It doesn't interfere with their full-time job. They can simply look for our pattern after the market closes and place a trade the next morning. And by the way, we've got a couple of hundred people in this room. don't tell me, I already know, but tell other folks here, if you already have A-line or if you've been in the A-line, why don't you tell folks your experience? Tell them the truth about your experience in the A-line. I'm sure they would, Sarah will repost my testimonials, your testimonials, but they would much rather hear it from you than me. Trust me, I promise you. Let's take a look at Taiwan Semiconductor. On January 31st, the daily candle closed below the A-line. It was a clear indication of a potential opportunity the next morning. Very simple. For reasons that will become clear, TSM moved higher over the next 5 trading days. Anyone who opened the position would have seen 125% gain. That's 2 times the return in less than a week. Every $1,000 would have turned into $2,250 without breaking a sweat. And that's why I favored this pattern above all else. You don't need 5 or 10 monitors like I have to trade it. You don't need a PhD in charting. You don't need to study hours and hours. One simple indicator, a little common sense, can target a regular, consistent account growth. And today, I'll show you everything you need to start trading this pattern, including the stock to trade, the indicator, the anomaly behind its effectiveness. By the time the webinar is over, you'll be able to be equipped, fully equipped, to trade this pattern alongside of, right? So by the time it's over, yeah. So if this is your first time here, my name is Roger Scott. I'm the senior analyst and trader at the Trading Pub. I've been doing this for 31 years. We got to change this slide. It's 31 years now as of January 6th or 7th. Now, let me give you a little bit about my background. I'll be very, very brief. I've managed money with Kevin Hassett, who's the senior financial economist of President Trump's administration for the 2nd term. And yes, this works with small account Lloyd. So Kevin Hassett, senior financial economist of President Trump's administration. I've worked with Charles Calomiris, the top professor of economics in Columbia University. I met Hassett through Calomiris. And I've also worked with Turtle Trader, who is the youngest Turtle Trader. That's Richard Dennis's experiment on trading, okay? But for the last 5 years, my focus has been regular folks like you, teaching you guys regular stuff. I've shared hundreds of money-making opportunities with folks just like you. And that's not an exaggeration. The last year, I've posted top returns like 110% in 4 days, 112% in 12 days, 166% in 1 day. And we get so many testimonials now that I have my own Slack channel for testimonials. So we get a lot of testimonials. And folks, if you have any questions, I promise I'll answer each and every one of your questions as soon as I'm done here. Okay, just give me a few more minutes and we'll get it done. Now, a few of the most recent ones. Dollar General, 290% profit this morning. Bob, 425% gain, RTX. Damien, 2,000 became 28,000. Mary took 14 trades and made money on all of them. James started with 4,000, now have over 8,000 in just 15 days. Pretty good, right? Oh, let me repost that. Thank you, Bob. That's very, very nice of you. Very nice of Bob. Post that. Thanks, Bob. Very cool. So, Sheldon took my small $2,000 account, turned it into 17,000 in just 6 weeks. And those are great testimonials, but this pattern takes precedence over all of it. It's one of the few patterns you can count on, regardless of your experience, time constraints, or capital. It really, really does a great job. It's effective enough to be traded by real professionals and basic enough to be used by beginners. And that's why I want to show you how to trade the A-line pattern inside your own account. I believe this one pattern can help you experience your first big breakthrough in technical trading. 1 second, I just got to check something here real quick. Sorry about that. In all of my years as a trading educator, I find most folks are good at picking the right stock, but they're bad with market timing. If your entries are off, your chances of making money deteriorates significantly. But that's where the powerful pattern begins. It keeps you out of trouble. When a stock closes, example, look at the market data for NextEra Energy. At first glance, it looks like the perfect stock to trade. Question is, where do you enter? Let's say you enter right there. To the regular eye, it looks like a good place to initiate a trade. But unfortunately, the stock pulled back and you would have been stopped out. Ouch, not good. What if you bought right there? Once again, the price pulled back and you'd have lost money. What about right there? In that case, you would have done well, but it would have taken you 3 attempts. Now let's apply our indicator and look for the pattern. Same chart. Here it is with the indicator. You can clearly see one clear entry point right there. Every candle on the chart, it's the only one that closes below the A line. In my opinion, it offers the best possible entry point for a trade. Anyone who opened the position the next morning would have seen a 79% gain in just 5 trading sessions. Had you held a little longer, the return would have been 150%. Okay? So if you've struggled recently, even as many stocks have moved higher, it's likely has to do with your entry points rather than the stock that you're trading. Okay? And that's the real beauty of this particular pattern. When it forms, we know we have an optimal entry point and we know a bullish move is probable. And remember, folks, you don't need to know this pattern. I'm giving you the signals. So it's not necessary for you to have the equipment to be able to trade this. You don't need a Bloomberg terminal. I'm giving you the entries and the exits, the profits, everything you need, the strike price, expiration dates. These are swing trades. At first glance, it's hard to find an optimal entry even as the stock moves higher. But let's apply our indicator. In this case, we could see 2 ideal entries, one on January 3rd and the other on January 17th. In both instances, the stock closed below the A line. All you had to do was open a trade the very next day, knowing a bullish move was probable. Anyone who did would have walked away with 2 winning opportunities worth 136% and 51%. $2,500 into each of those would have turned into almost 10K. Not bad, not bad. A car payment maybe, cover some groceries, depends where you shop, right? I mean, if you shop at Publix, my God, whew, they've gotten really expensive in the last couple of years, you know? Credit card debt, plane tickets, emergency fund, or even back in your trading account. Now, I'd like to remind you, no pattern wins 100% of the time. Despite the fact we've been very successful, it's not magic. You will have losing trades, just like the one that we've been holding now for a few weeks. It's not doing good. We're probably going to lose on it tomorrow. That'll be our first loser in out of 25 trades. It's pretty good. I'm going to say that's pretty damn good. Now, I can't guarantee home runs every time you step up to the plate, but what it can do is help identify near perfect entry points and strong opportunities for you. Doesn't matter if you've just opened your first trading account. Doesn't matter if you've never won a single trade in your life. When used properly, on average, it wins almost 8 out of 10 trades, which is really, really solid. And live, after we've done back testing it and all that stuff and actually trading it, the last 25 trades, we haven't even lost yet. So we've had 24 winning trades. So I shouldn't count my chickens before they hatch, because a lot can happen between now and tomorrow. That's not because we're doing anything extra special. The secret behind all of this starts with our indicator. And there's actually a couple of indicators. Like I said, it's called the A line, and it's short for accumulation line. It's used to determine if a stock is trading above or below the market value. If the candles are above the indicator, it means the stock is trading above market value. In a strong trending stock, the candles will stay above the indicator about 95% of the time. You could see it, what I mean, right there. However, in the 5%, when the candles dip below the indicator, it means the stock is trading below market value. That's not good either. And that's important to understand. Very, 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 very important to understand. Because typically, where we see institutions step in to accumulate blocks of shares. And as you'd expect, this accumulation is what drives the stock back above market value. I got to say, on a different note, this is the choppiest day I've seen in as far back as I can remember, especially during earnings. What is the market thinking today? And that's why it's important right now. Very, very important. When the stock closes, below it, we know institutions are likely driving price, which is really, really important, because, here, let me just repost this. Thank you, Adam. I appreciate it. Thank you, Eagle Beagle. We know that institutions are likely accumulating shares and drive the stock price back above market value, which is really, really important. Okay? Really, really important. In the trading world, we call that the low hanging fruit, right? Don't you want to always be don't you always want to be in the low hanging fruit environment? For example, look at the market data from January 3rd. It's the day Nvidia closed below the A line. It told us that the stock's price had fallen below its true market value. In the eyes of institutions, it was an opportunity to accumulate shares at a below market price. As you'd expect, the stock popped back above market value as institutions likely moved into place. Anyone who opened the trade the next morning would have captured 268% return in just 4 days. That'd be like putting away $1,000 on Monday and walking away with $3,680 on Thursday. Obviously, it's a really, really good return, but it didn't happen by chance. Okay? This pattern plays out hundreds, maybe thousands of times per year. Now, each time a trending stock dips below market value, it can trigger the institution's algorithm. And as you'd assume, these algorithms are programmed to start accumulating shares. This accumulation often continues until the share price is no longer trading below the market value. Okay? That's the reason why the stock usually snaps back up above the A line within a few days. The technical term of this is algorithmic accumulation. It's an anomaly I mentioned earlier. It's been studied by major schools like Harvard and Yale. And by applying the indicator to our charts, we can see where this algorithmic accumulation is likely to happen. And here's the thing. The algos are not locked on a few tickers. They're locked on hundreds of stocks and ETF. Look at SPY. You can see each instance where the price closed below the A line and where the algorithms likely stepped in. It happened on January 17th, January 31st, February 13th, February 21st, March 15th. The studies show that 80% of all markets moves are driven by algorithms. Okay? Now, in this case, you don't need to rely on studies. With the indicator, you can actually see it with your own two eyes. It doesn't matter which stock you're looking at as long as it's trending higher. You could see it right there with Apple, NXP Semiconductor, Vista Energy, Costco. Man, that chart looks good. Charles Schwab, JP Morgan, GE, Progressive, and dozens of others. Thanks to the algorithmic accumulation, the stock has almost no choice but to snap back higher. That's why I consider this to be the world's most predictable pattern. And that's why it's so critical right now. It highlights the exact point where the algorithms are likely to accumulate shares. And as a result, we can get near perfect entry point for our next trade. All we got to do is wait for the daily candle to close below the indicator. Open a trade the very next morning and close out anytime the stock crosses back above it. Now, that's how we've won 24 out of the last 24 published trades. Now, in a moment, I'll set you up with everything you need to trade this pattern, including my complete A-line dashboard and a few stocks to help you get started. But first, let me show you how to set this up. I wouldn't blindly open a trade just because a stock closed below the A-line. We're looking for stocks where institutions and their algorithms are likely to intervene. And that's why I like to follow a few key rules to help reinforce our chance of success. If you want to grab a pen and paper, this is a good time to do it. Avoid stocks under $20 if you're going long. If you're going long, you don't have to worry about that if you're going short. Those are stocks institutions are not looking to buy. Now, if a stock used to be $100 and now it's $12, like Guess, like KSS, like Pizza, that's fine, or whatever it is, but not going up. Going down is absolutely fine. That means they're ditching those stocks. Now, ATR, find stocks with an ATR above $1. Usually that's not really hard because I have 900 stocks on my list. Usually $20 stocks are above $1 anyway, but basically we want volatility. If the ATR is not over $1, you could probably tell institutions are not going to be keen on those stocks. That confirms the stock price can fluctuate. And again, institutions won't like it if it doesn't do that. Only trade stocks with a strong trend. Stronger the trend, the more engagement from the algos. You don't want to trade stocks like this. You want to trade stocks like this. How many times have I told you this? How many times have I gotten over this with you in the VIP room? How many times have I told you that's the difference between your 65 percentile and your 85 percentile? How many times we've been down this road? By following these rules and a couple of others, which I'm not going to mention here, we're able to isolate the stocks most likely to see algorithmic accumulation. It's allowed us to grow our model portfolio by an average of 85% per year. And that brings me to rule number 4. A single rule can take our results from good to great. And it's a very important one. Only open a trade if the next day's opening price is above the previous day's closing price, assuming you're going long. You don't want to trade when stocks are down and the market's up. This is critical because it confirms algorithms have started accumulating share, and preferably the stock is stronger than the index. That's also there. Then there's a couple of other little nuances. Now, I'm going to tell you something. A lot of you are like, well, it's just a line. I could just do that myself. If you think that's, I had a guy tell me that, Roger, I'm never going to pay money for something like that. It's just a line. I could do it myself. Folks, if you think that this is just a simple line, I got a bridge to sell you. It's a combination of 5 indicators all working together in synchronicity, and they all have to be completely aligned with each other. Okay. For example, take a look at VST. And you also know how to select price action and find price action. And most of you have absolutely no clues on finding out right now, which is why we're having a lot of those sessions in the VIP room. On the Monday afternoon, the stock closed below our indicator. In this case, it closed at 26.12. In order for us to open a trade, we'd want to see the stock open higher the next morning. And sure enough, on Tuesday, the stock opened at $26.18. That's clearly above Monday's closing price and a clear signal that algorithms have started accumulating shares. As expected, VST jumped back above market value as the algos continued to fire off, right? Anyone who opened that trade would have seen a 107% return in just 4 days. $2,500 would have turned into over $5,100. That's the real beauty behind the A-line. We don't have to scour markets all day looking for setups. We don't have to watch every market tick. At the end of each day, we can see which stock closed below the A-line. Very, 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 very simple. Very, very, very simple. If it did, we know we have a possible opportunity with a near perfect entry point. And as long as the stock opens higher, it means the algos are firing and it's game on. Just like what Bank of America did. Let me show you. On March 15th, the daily candle closed below our indicator. The stock closed the day at 35.28. The next morning, it opened at 35.66. Once again, it was a clear signal that algorithms had started accumulating shares. Anyone who opened the trade that morning would have seen a 115% return in just 4 trading days. $2,500 would have been over 53.75. Not bad, actually. Pretty good number right there. Okay. Now here's the thing: you wouldn't have needed $2,500 to get in on the action. The cost to enter would be about $100, and that's pretty much what you could do if you have a small account. It's very small account friendly. Matter of fact, you could see all the last 24 trades, $200, $300, $150. There's nothing crazy there. If I was starting from scratch with no software, this would be the first place, no tools and very little money. This pattern would be the first place I would look. Let me show you AZN. On May 29th, the stock closed below the A-line. Had you been following the pattern, you'd know there was a possible opportunity in the morning. In this case, the stock opened higher and it was game on. Anyone who opened the trade would have seen a 250% return just 5 days later. And keep in mind, all these setups just happened. There will be plenty more just like them. Now, obviously, I'd never promise the future returns are against losers, right? I mean, we're taking one right now. We're about to take a trade tomorrow that's going to probably be a loss. And it'll be our first trade out of 25 trades. I could totally live with that. I mean, like, I could really live with that. But I have my eyes on several A-line setups right now. Matter of fact, I'm looking at 2 right now that I'm literally staring at right now. And as soon as one triggers, I don't know if it'll be these 2, but as soon as one triggers, I'm going to send it out to you. Like, I mean, look at this market. This is some, this looks like an overnight session to me. It's that bad. But nonetheless, it's all part of a new initiative, or not a new initiative anymore, but maybe this year it is. And to my knowledge, it's the only research service that uses algorithmic accumulation to find worthwhile opportunities regularly. Oh, here's the trade. So you could see, you could see right here. Look, Roblox, Sound, Square, Dollar General, IP, FI, GM, Palantir, PK. These are regular stocks. These are not like $2,000 stocks. A couple of $100 per option. Okay, nothing crazy, nothing fancy. That includes 50% winner on Square, 77% winner on FI, McDonald's 43%, BBWI 83%. Anyone started with $5,000 and took $1,000 on each trade would have had over $16,000. Now, outside of a very small group of traders, very few have traded the A-line pattern. Very, very, very few. But today, you'll be invited to join us for what I believe will be some of the best setups over the next 12 months. Now, if you follow my work in the past, then you know I don't blow smoke. I'm very, very conservative, and I'm very factual. And that's what a few of my top students have said about my services. Dom says no losers over the last trades. Yeehaw, I have no idea what a loser is. David, I'm doing great. Started with 20K and have 80,000 in 1 year. Gary made 2,100 on Enphase and turned 1,000 into 4,000. Dave, over 200% profit in 5 months. Angie, I've doubled my account in a month. And as good as those returns have been, my goal is to blow all that out of the water. And honestly, oh, good. DJ Dave made $2,600 on Dollar General. Love that. Yeah, let me repost that. Very nice. We made money on that in weekly cash flow too, by the way. Not the same way you did, but anyway. Angie says, I'm here, all true. Here, let me repost that. Look at that. Angie's right here. Thank you, Angie. My goal is to blow it all out of the water. Each week, my team and I will look for stocks that close below our indicator. We'll use our rules to confirm algorithmic activity. And as long as the trade lines up with the A-line, we'll an alert. It all depends on which stock cross our indicator and the algos are firing off. For example, in January, we had, this is January of last year, we had 4 winners. And by the way, look at the price, $300, $285, $430, $235. These are regular priced options. These are not, as I said, very, very normal priced options. Nothing crazy here. 2,000 into each would have paid out $3,575. Okay. And that ain't bad considering we didn't have to do anything backbreaking to find these returns. Now, as you might expect, we'll be using options. And that's what has allowed us to leverage these babies. Now, you could use stocks too. I'll give you the stock and the option. So you don't have to worry about which ones. You don't have to worry. I'll give you both. And if you're new to options, I don't want you to worry. I'm going to give you the strike price, the expiration date, absolutely everything you need to place the trade. It includes all the details, the symbol, the strike price, the expiration, the entry, the exit, all of the accoutrements that you need. No guesswork, no confusion. You'll just have to read the alert and decide if you want to follow along. Now, to make it as easy as possible, the notifications will be sent via text, email, and Telegram. But here's the thing. I don't want this to be your typical alert service. I actually believe this pattern can improve your relationship with the market. I do. With a little practice, I think you can master it. And that's why I designed the A-Line dashboard to help you trade this pattern on your own for Thinkorswim and TradeStation, I believe, too. It includes the A-Line indicator you saw today. It shows you if the ATR is over 1. And it even shows you an ATR, so you could see if we're, and an ADX, so you could see if, modified, I modified them both, so you could see if we're above or below specific thresholds. In other words, it's got all the tools you need to make sure that the stock is above 20, the ATR is over 1, and you have a strong, mature trend. And again, if you're trading to the downside, I don't care if the stock is below 20. The same ones that help our portfolio grow grow the account by 85% over the last 4 years. It also includes a specialized scanner that will point you towards all the stocks crossing through the A line. With one glance, you'll know exactly which stocks to target. Now, I could easily charge $9.97 for the entire dashboard, but today I'll include it in your membership free of charge. I'll put an instant link inside your members area. With a few clicks, you'll be able to upload the A-Line dashboard into your Think or Swim account. Now, I wouldn't just send you this dashboard and wish you a good luck. I want to maximize your potential, and that's why I'm going to give you a class so you can actually learn how to trade these goodies. So you could see for yourself everything that goes on in all of this, which I think is very, very important. I've even added a special training wheels indicator that can help you clearly see your entry and exit points. I've seen how eye-opening this pattern can be for both new and old traders alike. And again, I don't care if you've been trading for 2 weeks or 40 years. You can apply this the right way. This is the pattern I prefer to teach our employees. It allows them to target what could be hundreds of dollars each month, depending on their account size. Don't be surprised if you see Sarah becoming a pro trader using the A-Line in future broadcasts. Just recently, I gave the dashboard to Rodney. Rodney's one of our copywriters. He trades like you guys do. I mean, he's not a professional trader. He writes copy, right? He writes copy. Sarah says she can't wait. Within the first week of trading, he closed 7 winners with just 1 loss. His average return per trade was around 23%, with top wins around 40%. Full transparency, he's not a complete rookie, but he's no expert by any stretch of the imagination. He'd tell you he's not much of a trader, but he followed the rules and found several opportunities. For example, take a look at Freeport McMoran. On May 2nd, the stock closed below the indicator. The next morning, it opened higher. For him, that was the signal to open the trade. 2 days later, he closed it out with a 25% gain in 2 days. $2,500 turned into $3,125. Hey, Al, we're all here for you. We'll send you one after we're done, okay? But we're still here, Al. Al has bad reception. Now, obviously, I'm not guaranteeing you'll have the same success we've had. Everyone moves at different speeds and has different goals. But regardless of what goal you have, I think your dashboard can help you achieve them. Maybe that's to become a more proficient trader. Maybe to make more money. Whatever it is, I believe it could be much more attainable with the A-Line in your corner. Now, I'll be wrapping up in a minute, but I'd like to share one more detail about the A-Line. It's a way to leverage the A-Line pattern to the downside. The algos don't just accumulate shares, they also sell them. And that opens up a totally new opportunity called the A-Line shorts, okay? The A-Line shorts. Very, 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 very important, all right? Yeah, this is a live presentation, yes. All you got to do is wait for the daily indicator to close below the A-Line. Open a put trade the next morning, close out anytime the stock crosses back below the indicator. In fact, we found several market examples where it just happened, including Magna International, 69% return, Cardinal Health, 186% return, Darden Restaurant, 291% return. Nice. $2,500 could have almost turned into 10K. Again, I'm not going to make any stupid promises. Again, we went through 25 trades with 1 loss that we haven't closed yet. So we've had 24 losers that have been no losers in 24 trades. Okay, I really cannot do much better than that. Okay, that's money to help replenish your retirement account, catch up on some bills, cover a mortgage payment. And again, in this case, we couldn't have done it while the stocks were going down. For traders like us, that's a massive perk. It means we have the chance to target real opportunities regardless of which direction the market is heading into. So you won't just receive trade alerts to the upside, but also to the downside, all right? In my opinion, you could easily sell A-Line shorts as a service. I'm going to give you a couple of trades in a few minutes. In fact, our marketing team suggested that I offer it as an upsell, but I'm not. My goal is to teach you how to make money, not to take it from you, okay? I don't want to do that. And that's why I'm including these setups at no extra cost. So if I see an A-Line to the downside, I'm going to take it, okay? Apple's really coming down. Now, I just showed how $2,500 turned into more than $9,700 in just 4 days. And with that type of potential, it's easy to see why the membership price starts at $22.97, right? That includes at least one A-line alert each week. Each week. The A-line dashboard, the scanner, the master class, all of that stuff, all of it. Right. All of it. But today, new members can take advantage of a very, very special bonus. You see, our pattern has helped grow our portfolio by more than 80% per year over the last 4 years. And that's why we're slashing $800 off the normal retail price. So instead of seeing $22.97, you'll be able to secure access for just one payment of $14.97, which I think is great. What you do with that savings is up to you, but it could go towards your first A-line alerts. So if you're interested, you'll want to get your credit card ready now, and here's why. In honor of our current trade win streak, I'm also going to add an additional year to your membership. That's right. I'm going to give you one additional year of trade alerts for free. That's at least 100 opportunities like I showed you today. Fair warning, this deal expires on Friday. That's tomorrow night. Okay, so if you're ready to get started, Sarah, go ahead and post the link here for folks so they can get, oh, there she is. She's fast. So you're ready to get started, get an extra year on the house, go to rogerscott/ALA. You can also click the link in the chat. All the details of your new membership are on the next page. If you'd prefer to speak to a real person, call 904-404-8873. Everyone who joins me today will automatically receive one extra year of A-line alerts plus an instant $800 discount. To get started, go to rogerscott.com/ALA. Now, in the last 24 attempts, the A-line has come out on top 24 times. 24 times. Now, if you're serious about learning this pattern, it's a good day to do it. That's because I'll be posting the next alert in the next few days. Notifications will be sent via text, email, and Telegram. That's right, Telegram. To ensure you receive it, go to rogerscott.com/ALA. Get it now. Get 2 years for the price of one. I'll take a question in a few minutes, but first let's address some of the most common ones. How much money do you need? The average trade, I thought it was $300 to $400. So 400, I think, is on the upper end or maybe the middle end, but anyway, they're not expensive. If you can allocate, and there's usually one trade at a time, so if you can allocate $1,000, $1,200 from your account just to take these trades, you can get started. Here's one we did: Bank of America, $128, 38% gain. Not bad. 38% gain overnight. How long does it take to enter the A-line trade? I don't know, about 10 seconds. I mean, it's fast. I mean, we're buying calls and I'm giving you the strike price. So the lifetime price is $24.92, which I think is a fantastic price because generally you'd be paying $14.97 per year. So if you can get, and folks, if you already have the A-line, you know you wanted to get anybody who has a program that gave them 24 winning trades, who says I don't want it anymore. Something's not right with them. They're not thinking clearly. Let me just say that. How often are the alerts? About once a week, Gregory. Once, twice a week. Not, about 50 alerts per year. Maybe 60 alerts per year, just depending on what's going on with the markets. There's no multi-step trades. There's no strangles. There's no straddles. There's no condors. There's no butterflies. I don't do any of that. I don't do any of that. None of that. None of that. What stocks can I trade the A-line pattern on? Any major trending stocks or ETFs. How will I know when it's time to close the A-line? Exits will be sent via text, email, and Telegram. If you haven't clicked the link in the chat, go ahead and do it now. All the details of your membership are on the next page. Once you submit your order, don't close the next page. You can get, if you sign up for lifetime, I'm going to give you the stock fetcher code, which means even if you're in Canada or anywhere else, you'll be able to scan them with one click of a mouse. Okay? Very, very, very powerful. It'll let you see every stock showing the A-line pattern across the market with literally just one click of the mouse. One click of the mouse, which is pretty cool. I'm gonna tell you that right now, which is pretty darn cool. And again, if you're already, do you do spread options? No, I don't do spreads. But Daryl, if I really, really like a trade and the option's like more than $5, I'll just avoid it or I'll give you a debit spread. But I don't think we've done that yet. So technically, I'm willing to do it, Daryl, but I haven't done it yet. I hope that answers your question. I really try to find stocks that are not expensive. I try not to give you like Matt and I usually will red flag if it's over $600. I like to be in the $200-300 range usually, you know. But again, and if you want to do a spread, and if it's too expensive, if you want to do a spread, just email me. I'll give you the spread in 30 seconds. You guys know you can always email me. I respond very, very quickly. Has anybody had a bad experience with me responding to them? I respond like this, unless I'm obviously in a class. So this will let you see every stock. So let me give you a quick example. Let me show you a real quick example how cool this is. Here, so very, just real simple. Here, pull this up here. Oh, why is this so difficult today? All right, let me do this. This is just pain in my ass today. Hold on, folks. Let me just do this real quick. Okay, here we go. Here, let me show you. Stock Fetcher, my filters. Look, A-line longs, A-line, they're both right here. And I just screen out the ones I like and the ones I don't like. Like literally like one click. So if you get lifetime, you can get access to that. And if you get access to that, then you're good. Then you're good to go. Okay. So just so you don't even need you don't need TradeStation or anything like that at all. Let me just put this slides back on. Sorry, I just wanted to show you really fast. Ken says, "Oh, thank you, Ken. That's very nice." Ken has some nice things to say. Ken has been around for a while. Adam's been around for a while. Let me post this for you guys. Thank you for the nice words, guys. I appreciate it. And, Ken, let me repost that. Thank you, Sarah. I appreciate you doing that. Not only does it open up a world of opportunities, but you can get it for free. If you have reservations, trading one pattern over others could sometimes seem logical, but the numbers speak for themselves. I can't think of many strategies that have averaged an 85% return per year and a 100% success rate on the last 24 trades. I honestly don't. That's pretty darn good. Pretty darn good. That's why I want you to try it for 100 days without stress about the membership fees. If after the first 100 days you decide that it's not for you, call me back. I'll give you your money back. But you get 100 days to play with it. If things go as planned, I would not be surprised if the membership was covered with your very first few trades. I really wouldn't be surprised at all. I can't promise it, but I've seen it happen many times with different services, like Dickens. I joined Stealth Surge for 1 year, paid for itself with my first trade. Very nice. Love it. And folks, if you're already in the A-line, this is a great time to upgrade for another year because you'll get 2 years for the price of one. Richard has made a lot of money on the A-line. I know that because I see his. I send you guys his profits. Dwayne, I've been in pattern trader from the start. I've already made the cost of the program back 5 times. Very nice. Click the link that Sarah posted a few times, or go to rogerscott.com/ALA. When you do, you could be one step closer to joining other successful students who have done great. Frank says, I've been trading for 25 years and have never experienced something like Roger. I just wish I would have seen him earlier. Me too, Frank. And don't go anywhere. I'm going to give you guys some trades. I hear from Roddy all the time. I actually heard from Roddy this morning. I have over 100 successful trading experiences from your alerts. If people still question if this is the real deal or not, it is. I held my DDOG options and I'm up 101% so far today. Meta, 216% on Meta. Thank you. Ronan, Jeff, $3,917 for contracts. And folks, I get a lot of testimonials. Just to give you an example, here, let me show you testimonials. This is just randomly. This is yesterday. Look. This is the day before. I mean, I get a lot of testimonials. All the time. So I really like you to join. I'd love to have you come along for the ride. It's a great party. You could do this in your retirement account. It doesn't matter your trading experience. And if you have remaining questions, I'll address them right now. Join today, receive 1 year for free A-line and $800 discount. Remember, you get 52 A-line alerts, the dashboard, the scanner, the short alerts, the options criteria, the master class, additional alerts. Remember, 2 years for the price of one today. Text, email, telegram, $800 webinar discount, 100-day money-back guarantee, and additional goodies. Stu says 88% OM. I'm sorry, Stu, I can't. You said 88%, but I don't know what you wrote 88% on. Think or yes, it comes with Think or Swim Scan, and if you buy lifetime, you'll also get stock fetcher code as well, which is what I just showed you. Now let me show you. Let me just show you a couple of stocks that I actually like right now. DC 2000 here, I could show you right now. That. Oh, why is curses? Here, I'll do it this way. All right. Go to bar chart and I'll show you this way. More than one way to skin a cat. Couple of stocks. Ball. Right here to the downside. Breaking right here. Beautiful short. I mean, this is a beautiful short. Matt, take a look at it. Ball, B-A-L-L. Nice pivot right here. Your stop loss will go right here. Beautiful pivot. Probably will continue moving lower. And the next one I like is BG. What's the difference between A-line and True Trend? Their A-line is slight. A-line hasn't had any losers in the last 5 months. I don't know how else to say it. That's pretty much there. It's been a little more accurate. They're both great programs. Over time, like if you go back to A-line from 2000, why do I keep saying 2000? From 2020, and you look at comparing them from then, they're virtually identical performance. If you go back 100 trades. So Bunch, I also like this one. It has to break this green line right here. If it breaks this green line, it'll be an A-line. So I gave you two stocks. I wasn't even planning on doing that, but BG and Ball, both are Bs and both are the stocks. Take advantage of it. Don't mess around. It costs. Do you have a way to Zoom user? You're going to have to call customer service, and they'll be more than happy to help you. I would just call 904-444-8873, and they will contact you, and they will try to work with you the best that they can. Sarah, is there any questions that you want to ask me?
Yes, in regards to the indicator or scanner, they don't have Thinkorswim in Canada. Is it on TradingView?
I don't know, Matt. Do we have it on TradingView? A-line for TradingView? I think we do have it for. We'll have to confirm, but I do think we have it. But you know what? I'll tell you what. If somebody doesn't have it, I'll just give. If somebody from Canada buys it, I'll give them the stock fetcher code. And stock fetcher is like $6 a month, okay? And then you can just press a button. But I believe we do have it for. I do believe it. We have A-line for. I don't see why we wouldn't have it. It's very straightforward. So I don't see why we wouldn't have it. I believe we do. I believe we do.
All right, sounds good. Raf was asking if you use a stop loss or not.
No. I never use stops. I don't use stop losses. I actually like to make money, so no stop losses. No. Guys, just so you know, when you place a stop loss, everybody could see it, right? It's like publicly saying I'm gonna flashing like take me out. Like it's like walking down the poorest street in the city and counting thousands of dollars in your hand and doing this with money and wearing like a gold Rolex. That's what you're doing by placing stop losses. I mean, I'm telling you, that's what you're doing by placing stop losses. You have a neon sign that says, take my money, I'm a sucker. That's what you have when you play. Now, there's nothing wrong with mental stop loss or alerts, but placing stop loss is very, very dangerous. And I don't know any professional traders that place stop losses. All right, let's continue.
I always love your analogies. They never fail.
Thank you.
So we do have a question in regards to the two stocks that you just mentioned. The sound cut out on someone's feed. Are those both shorts?
Yes, those are both shorts.
Okay.
Those are definitely shorts considering their trend is like this. They're definitely shorts. You should be able to take your monitor and put it 12 feet away from you and instantly tell if a stock were long or short. If you can't do that, don't trade the stock.
Yeah, makes sense.
But this is not me talking. This is Ed Sakata from the Market Wizards. That's his analogy. Take your monitor. Back then, monitors were this big. You know, this is 1980s. He said, take your monitor, put it across the street, and if you can't, I mean, across the room, and if you can't tell if you're going long or short, don't trade the stock. It's a great rule to follow.
Oh, I like that.
Yeah.
Well, in regards to, I know you mentioned it before, but we are getting questions in regards to the options on it. You're not trading spreads, correct? Is it just calls and puts?
Just
Or-
calls and puts. Just
Okay.
calls and puts. We're just buying calls or buying puts. That's it. No monkey business. Just simple calls or puts.
All right. And this one was from Albert. This was earlier in the presentation. He said, are you saying that you get in at the open the next day, or do you watch the price first?
I didn't say anything like that. I basically watch price action to see for price to get above a certain level. When it gets above a certain level, I add the stock to my watch list. And after I add it on my watch list, I want to get a confirmation that the stock is outperforming the S&P, assuming I'm going to the long side. So it's more of a 3 or 4 step process. And by the way, I do explain it in the members area. I show you exactly how I find these trades. So if you want to find them on your own, they're not hard. And I'm going to tell you guys something. I'm going to tell you this too, Sarah. I have 3 children. None of them show any interest in the market whatsoever. They have no interest in the market whatsoever. I mean, like zero, like zip. Okay. One wants to be Dr. Doolittle. One wants to be a lawyer, and the other one doesn't know what she wants to do. She's 11. But I always threaten them and tell them that if they ever decide to get into the stock market, this would be the program I would start them with. And actually, when I have someone who comes to me who starts out, this is the program that I use. This is my trading 101 program, because it's hard to mess it up. That's why it's hard to mess it up with this one.
I like that you said that. I'm one of 3 as well. And my father wanted to get one of us in trading. I was the one who was interested.
Yeah, well, I would definitely start with this program because it has the fewest moving parts. It actually exposes you really well to technical analysis. It forces you to be on the right side of the market, and there's very few moving parts. You don't want a lot of moving parts when you're starting out. This has very few moving parts, and it works really, really great. Somebody asked me, does True Trend use spreads? No, the True Trend, none of those programs use spreads. Now, I'll explain to you where the spreads come in, okay? Sometimes, and I mean, and honestly, I don't think I've ever done this but sometimes there'll be like a stock like Nvidia before it split, or Tesla, where the option's like $15, and I know you guys don't want to pay $15. So if that's the case, I'll give you the debit spread as a bonus, so it'll be like $3 instead of $15, just so you save money, and I'll give it as a bonus trade. Or I'll just say, hey, if you want, do this. But I don't usually put those trades in. The average trade here was like $300-400, so there's really no reason to do that. But if I ever do, it'll be a debit spread just to offset your cost, just to give you a little break on the cost. That's all.
And we did get a few questions. Some of them missed the 2 stocks that you gave out. Would you mind repeating those?
No, not at all. Matter of fact, I'll show them to you. They're right here. It's Bungie. Here, you could see. I could take this across the room and show it to you, and you probably say this stock doesn't look very strong. That's the kind of these are the kind of stocks you want to short. You don't want to be the first guy to buy. You want to be the last guy to sell. Okay, so if it breaks this level, it looks like it's going to continue going down. It's a very high probability trade, in my opinion. And the other one is Ball. Ball. Let me pull that up. Very, very clear. I mean, even here, it's making lower highs, and just, this is. I mean, look, this thing went from 70 to 50. This is bad stock, and it looks like it wants to go down further. So these are the type of stocks we trade. We trade all the way up here or all the way down here. We want a stock that has very, very strong directional bias. Very strong directional bias. If it doesn't have strong directional bias, we're not going to give you that. We're not going to give you that stock. So very, very strong directional bias. So those two stocks aren't ready to trade. I think one of them may be ready, Al, but the other one needs to pass that threshold level. Please don't trade stocks. You would buy puts for them. And if you want, the actual trades, remember, I could change my mind on these. I would not put in real trades with money we're giving you guys. I would paper trade them. Learn how to trade. Then join the program, get the options, get the strike prices, get the expiration dates, and trade the right way where you can get the entry and you can get the exit. That's what I would suggest you guys would do here. Okay. Any other questions I can answer?
I think we might have covered them all. And as far as education goes, you have training in your members area. That's right.
Yes, I have several modules of training in the members area where they explain to you exactly how everything works. And I also, as you probably know, I'm pretty fast to get back to people, because if I don't, I'm going to be spending the next 24 hours responding to emails. So I respond to emails very, very quickly. Explain how others can see your stop loss. Where Al, I don't know if you know this or not, but when you're trading stocks, trading is an auction. Your market maker can see your trade. They can see your order. Do you know why? Let me explain something to you. Let me open up your eyes for you. Robinhood? You know how Robinhood makes their money? How do they make money? They make their money on selling your orders to large hedge funds. It's not a theory. You could look it up. They announced it when they went public. They sell your order flow to brokers so they can take the other side of your trade. Yeah, no joke. No joke. Major hedge funds are seeing the other side of every trade that comes into it. It's not just Robinhood, Schwab, basically anybody who's not their own market maker. So they can literally see your orders going by like a sign, like an electric sign. Okay, they can literally see them going by. Well, let me ask you a question. Let me ask you guys a funny question. How do you think, how Lance does unusual option volume? What do you think that is? Aren't those orders going in? Aren't those exactly that? How do you think we see them? You could see everything. Everything is transparent. What's the difference between Stealth Surge and A-Line? Stealth Surge uses seasonality and technicals. This uses just technicals. This doesn't use seasonality. So it's just a different way to trade. But yeah, I mean, think about it. Think about it logically, common sense. If you could see order flow, if you could see all the volume going through, can't you see every trade going through? You can't. Everything is completely transparent. So very, very simple. What does it cost to put the A-line on my chart? It doesn't cost you anything, Doug. You can get the program and you can set up your charts just like mine. You'll have the ADX, ATR, all that stuff. You'll have it exactly like we have it. Exactly like we have it. All right, Sarah, thank you for hosting me today. I really appreciate your time. It was a great class. Let's do it more often, okay?
All right, sounds good. I'm going to go ahead and steal your share here.
Thank you. And folks, if you have any other questions about this, feel free to reach out to me, Roger, let me just put this here at rogerscott.com, and feel free to email me. Folks, have a great day. Sarah, if I don't talk to you, have a wonderful weekend, okay? Bye. Bye, everybody.
All right. Well, thank you for joining us today in this exciting session from Robert. He did share both the good and bad times on its unique relationship with the algorithms. Like he mentioned, it's solely based on technicals. It's not seasonality like his other programs.